for weeks, people were saying the market is all about the virus. The economy is all about the virus. If you laid a chart of the stock market averages against the infection rate, as infection rates went up, the market went down in March. It was a very close correlation. That now has broken down because the economic numbers are really detaching from the virus numbers. I think for two reasons. One, a lot of leaders have said, we don't care what the virus does. We're not shutting down the economy. We're just going to push through this for better or worse. You can argue that that's good or bad. But from a purely economic standpoint, that means the economy is going to keep recovering. And secondly, I think investors are focusing more and more on the vaccine. The idea of shutting down, of distancing, let's face it, it has not been that effective. It has been effective in some parts of the country. Other parts it has not. But people are looking to vaccine. Again, last week when we saw the news about a possible successful virus from a major pharmaceutical company, that the market responded very positively. So I think people are looking, number one, the economy is going to push ahead no matter what happens with the virus. And we're seeing that in the unemployment numbers, which have been consistently above expectations. And secondly, they're looking for a vaccine.
Yeah, and I also wonder, especially on a day like today, when you have Regeneron coming out basically saying that they're going into phase 3 for their monoclonal antibody treatment as well, how much investors are now keying in not just on vaccine developments, but also on some of these treatments that could essentially act as a bridge to get to the vaccine, and how important that could be to all of these reopening efforts and case counts we're seeing too. Yeah,
I definitely think that the science has started to really move to the fore here, and let's face it, that's still an area where this country is very good, and I am confident we're going to get that. I do think the risk here is I think investors, there's a lot of good news priced in here, and investors have to keep an eye on places like Florida and Texas, California. These are huge populations, and if they truly get overwhelmed, they're not going to just be able to power through this and ignore the virus. And there are going to be some significant bumps in the next few months. So I do think there is some risk there that investors should keep an eye on. There is a level of infection, and there is a level of people dying that the political leaders cannot just ignore, and they would then, I think, have to respond with a more serious lockdown.
Jim, it's David. So the market itself, we've talked, and I remember the pain you were in terms of the downturn in March, mid to late March in particular. But you stuck with your program, which you've always told our viewers as well. You reweighted, and I would assume you're in a much better position now. But what would your advice be now, given the incredible rally we've seen where, again, the S&P is barely down now for the year and the NASDAQ's at an all-time high?
Well, it's, you've got to stay with the program, which means it's time to look at trimming some of the profits. I did that. I don't remember now. I guess it was about a month ago. There was one stage where, everything was up 25%, and I did a little trimming, and it got my next spot is when it's up 50%. It got very close to that. I'd have to check it. I don't think it's gotten back up to that yet. It got up about 47% from the low. 50% would be my next target. But I have to say, for me, it is actually harder. It is very hard to buy when it feels like the world is falling apart the way it was in March. And again, I wrote 10 about I was paralyzed, but I finally did it. I did stick to the program. It is maybe even harder to sell when things look great. There's kind of a euphoria, and you think, oh my God, if you get that positive reinforcement every day, you look at the stock market, but you've got to stick with the program. And when things look really rosy, when all the good news is baked in, that's exactly the time when you have to trim. And again, I don't mean a radical repositioning. I just mean rebalancing. Have your target allocation and then get it in line when it gets out of whack.